Are you watching the recent changes that are happening at the federal level where they're raising rates and all the talk of inflation and wondering how that is going to affect mortgage rates and your home buying experience? My name is Jacki Tait. I am the lead agent with Team 323 at Realty One Group Mountain Desert in Flagstaff, Arizona. And today we have a special guest with us who's going to help answer some of those questions. So first and foremost, I want to introduce my guest today. She's Karen Flores with Cross Country Mortgage. We're getting a lot of questions about, with rates going up and things like that, and people are starting to get a little bit panicky. Maybe just start by giving us a little overview about how mortgage rates and the Fed rates are connected.
Sure. So the Fed rates are the rates that affect things like credit cards, car loans. It's short-term loans that don't last a long time. Maybe they only last 10 years. Home equity loans is another example of that. Mortgage rates, though, are considered long-term rates because, again, most people take out a 30-year mortgage. Even though there may be some shorter options that people choose, they're considered long-term rates. The other big difference is that the mortgage rates are based on the bond market. And the bond market is mortgage bonds, securities, that are traded just like the stock market. When you hear the Fed raising rates, what they are doing is they're raising the prime rate. And the prime rate is what a lot of those other loan types are based on, the car loans, the credit cards, those things. So it's a prime rate plus a certain amount is what those rates equate to.
So the fact that the Fed has been raising that short-term interest rate, how does that correlate with a mortgage rate? Does the raise in that rate automatically mean that mortgage rates are going up as well?
So there is correlation, and yes, that can mean that our rates will go up. Okay. It doesn't always guarantee that our rates will go up. The reason mortgage rates have recently been going up is because of inflation first and foremost.
If we're looking at getting a mortgage right now, I know you guys have some different programs to help buyers with that. Can you tell us a little bit about what some of the options are?
One option that's become very popular, again, it used to be quite popular back when rates were higher many years ago, is a temporary buy down. So currently most lenders are offering a 2-1 buy down, which means, let's just say the rate today is 6%. We are going to be able to buy that interest rate down 2% from that. So the first year of that loan, they will actually be at 4%. The second year of that loan, they will be at 5%. And then the third year and the remainder of that term, they will be at the 6%. Okay. So this just allows somebody to not have to bite the bullet and have such a high payment right off the bat and gradually ease themselves into that higher payment. The good news is there's no prepayment penalty, so if rates do come down at some point here in the future, they can refinance that and get into a lower fixed rate.
I have been hearing something about a 40-year mortgage. Can you tell us a little bit about that?
Yes, the 40-year mortgage has been around, but with the increase in interest rates and the increase in home prices, definitely has become more of a needed option. And so we have brought back the 40-year mortgage. And again, the good thing about it is it gives you an extra 10 years to stretch out that payment and reduce those payments so more people can afford to get into a home.
So can you tell people watching right now, what are the things that they need to have prepared to contact you?
We would love for you to have your most recent pay stubs and your last 2 years of W-2s. If you're self-employed, we want to see your last 2 years of tax returns. As far as your down payment and closing costs, we would love to see your most recent 2 months of bank statements so that we can see where that money is coming from. The rest of it is information that we're going to get from you verbally. We pull a credit report so that we can see what the debts are that you owe and see what your credit score is. And then from there, we should be set to be able to qualify somebody and see what they can do.
We will make sure that we link to all of Karen's contact information below. And if you do connect with her, make sure you let her know that Team 323 sent you.